All right, hi everyone. Welcome to today's webinar brought to you by Vantage, where we will be conducting a first half review of financial markets for this year. All right, before we begin, just want to let you all know we're streaming directly into the Vantage app as well as over Zoom, so do not hesitate to drop your questions in the relevant chat boxes as we progress through today's webinar. Right, before we begin, of course, please take note of the disclaimer. Right, the information, context, and opinions which are expressed in this presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and or consultation on how a client should trade. Also, take note of the risk warning that comes with trading margin, forex, and CFDs as they carry significant risks and is not suitable for all investors. My name is Ketan Ramachandra, and this webinar series is brought to you in a special partnership between Vantage and FS Fortune Group, where we've been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so we are well underway into this third quarter of this year, right? The second half, the second week of July, third quarter of this year, second half of this year. So we're going to take a look at which have been the best performing major currency pairs in the first half of this year, as well as taking a look at whether gold has made new all-time highs and whether equity markets have surpassed their original all-time highs for this year as well. And then we'll wrap things up by moving on to the live charts and trading view and looking at the technical analysis for these instruments. Now, starting with the best performing major currency pair, right? If you look at the first half performance for this year, right? We can see if you look at the major currency pairs, basically they are the euro, cable, kiwi, Aussie, dollar CAD, dollar yen, and dollar franc. So these are the major currency pairs, and we can see that out of these majors, we can see the euro has been the best performing currency pair, gaining nearly 14%. And in second place, we can see dollar franc falling nearly 12.9%. So the franc has gained significantly versus the dollar. Likewise, the euro has gained significantly as well versus the dollar. So you can see in first place, the best performing major currency pair in the first half of this year has been the euro, followed by dollar franc in the second half, in second place. And in third place, we have pound dollar, otherwise known as cable. And then after that, we have fourth place, kiwi, and fifth place, dollar yen. Right. So let's start off by looking at the euro, or let's look at the top three currency pairs and see how they've performed now as we move into the second half, of this year. Right. So starting with the euro, right. If you look at it year till date, or not year till date, but rather the first half performance, if you look at where it opened, 2nd of Jan, the euro opened here on Thursday, 2nd of Jan. From this year's open till the close on 30th of June, or 30th of June was Tuesday. And we can see the euro has gained 13.83%, right? 13.83% for the euro. It has pulled back slightly in the second week of July, but we see it being bid up strongly once again. So you can see a euro since the open on Thursday, 2nd of Jan, until the close on Monday, 30th of June, has been up 13.83%. Now, if you look at dollar franc, let's see 2nd of, where are we? Right, 2nd of Jan is here. So it opened at 1977, and on 30th of June, it had dropped nearly 12.7%, right? Similarly, cable as well. Cable has gained significantly as well, the pound is appreciated significantly versus the dollar, right? After opening at 1.2515 on 2nd of Jan, it closed at 1.3734 on 30th of June, gaining 9.74%. And in fourth place, we had the kiwi. Right, let's take a look at the kiwi. Similarly, kiwi as well, after opening at 55.92 on 2nd of Jan, it had rallied as high as almost 61 cents, gaining nearly 9%. As you can see, a huge move in these major currency pairs, primarily due to significant dollar weakness. Right? The dollar weakness was brought about by investors and traders alike selling the US dollar as they lost faith in the US as a whole, right? Basically, with regards to the way the tariffs, global trade tariffs, had been implemented by the White House, had been announced and tried to be implemented, right? That had shook financial markets, raising global trade uncertainties, while injecting extreme volatility into financial markets in early April. Right, since then things have calmed down quite a fair bit, but we continue to see significant dollar weakness, broad dollar weakness persist throughout financial markets, and it's quite likely, right? We are likely to see these currency pairs continue to be moving in the prevailing trend. So that means Kiwi is likely to climb higher, right? Uh, dollar franc is likely to continue falling lower. Meanwhile, cable and euro are likely to resume the uptrend as well. Right, so these are the best major currency pairs, right? In first place, the euro. Second, dollar franc. Third was Kiwi, right? Wait, no, third was cable, and fourth place was the Kiwi. All right, now let's return to the slides and take a look at gold. Right, we can see a spot gold is tradable with the instrument XEU USD, and you can see since in the first, or rather in the first half of this year, gold was already up 28%. And when we look at the 1 year returns and 3 year returns, we can see gold prices have pretty much moved in a straight line, or not straight line, but have been consistently moving higher over the last 3 years, right? Since uh, over the 1 year returns, it has gained nearly 42.5%, and over a 3 year period, it has gained nearly 85.6%. So huge run up in gold prices over the last 3 to 4 years. Now, when we look at the chart for spot gold, XAU USD on the daily time frame, right? And if we rewind the clock all the way back till October of 2023, right? From this low in October of 2023 till the most recent intraday all-time high that was formed on 22nd of April, you can see gold prices have rallied more than 93%. And if you go back all the way to the lows of September 2022, you can see gold prices have rallied more than 160%. So pretty much it has been moving in one direction uh, over a period of 4 to 5 years, over a period of 3 years, quite easily, right? Of course, there have been pullbacks along the way, pretty strong pullbacks along the way, a little bit of sideways action, right? But nevertheless, gold prices have been uh, pushing higher over the last 3 to 4 years. Right, take note, right? The most recent intraday all-time high for spot gold was formed on Tuesday, 22nd of April, and this value was at $3,500 per ounce. We can see since hitting or marking this latest intraday all-time high, gold prices have failed to climb above 3,447, right? As you can see here, this level here has functioned as pretty strong resistance since 6th of May. Right, now let's go. Okay, maybe since we are on gold, let's start the technical analysis on gold. And then after that, we can move on to the indices, and then we'll wrap up things with the major currency pairs. Now, looking at gold, right, we can see that, of course, since 6th of May, right, it has failed to convincingly break above $3,425 per ounce. So very clearly, this is where we would identify the first resistance. Now, uh, despite uh, the US dollar weakening in the on between 23rd of June and 1st of July, right, we actually saw gold prices sort of climb higher as well, right? Of course, usually the value of the US dollar and gold prices share an inverse relationship or inverse correlation. So that means as the value of the dollar is getting weaker or falling, typically it will be supportive on gold prices and vice versa. So especially since um, last Wednesday, right, 2nd of July, we've seen demand for the US dollar pick up, right, and that has caused the dollar index to make this bullish reversal and retrace as high as 97.60 on Monday, 7th of July. So this little uptick in dollar strength has put some downward pressure on gold prices. And also with geopolitical tensions in the Middle East sort of de-escalating, right, with the ceasefire still holding up for now, that has also put some downward pressure on gold prices. A combination of a stronger dollar since last Wednesday, and de-escalating geopolitical tensions in the Middle East has tapered demand for safe haven assets such as gold, and we can see gold pulling back slightly uh, this we- uh, this week as well. Now, very clearly, first resistance for gold on a daily time frame is going to be at around this barrier here at $3,434 per ounce. Again, I highlight this as a zone here to include just the top of this candle here on Monday, 16th of June. And of course, the intraday all-time high at $3,500 per ounce is the second resistance. Now, despite gold being under pressure in recent weeks, it could come to stabilize at around an overlap level that I spot at $3,243 per ounce. So looking at this level here, right, we can see at this level previously acted or functioned as a little bit of resistance in mid-April. Then we see a significant swing bounce or swing low being formed in this on 2nd of May. See resistance once more. In the middle of May, another swing low bounce here on 30th of May. And we can even argue here last Monday, 30th of June, saw another swing low being formed as well. So this highlights a pretty significant overlap at $3,237 per ounce, which we can label as the first support. Now slightly below, and we can see another significant swing low being formed here on 15th of May. And this level also coincides or intersects rather with a prior swing high resistance that was formed on 2nd of April. So as price breaks above the prior swing high resistance on 11th of April, it has the likelihood to function as a support area, and that was what exactly had happened on Thursday, 15th of May. As gold prices bounced off this pullback support, it forms an overlap, which we can now label as the second support. Right? And this overlap level sits at $3,132 per ounce. Now, with gold prices falling towards the first support once again, right? Should this level hold, perhaps at some point this week or maybe early next week, this may be an area where we could see gold prices stabilize and perhaps make a bullish bounce off this level once again. Right, we can see here, right? Gold continues to trade in a strong uptrend, right? And also it has managed to uh, remain elevated above the first support since 29th of May. And we can also see that the Ichimoku cloud is highlighted in green, which the Ichimoku cloud is colored in green, which highlights the ongoing bullish momentum as well. So should we see gold prices, spot gold prices, pull back towards $3,237 at some point this week or maybe early next week. And if we can stabilize around this level here, this may be a good opportunity to try to ride the bounce uh, and for gold to resume the uptrend, perhaps rising as high as the first resistance. Right. Also take note that previously between 16th of June and 1st of July, gold was actually trading in a downward channel, but we saw a bullish breakout materialize by the end of 1st of July. And since then, gold has managed to stay above this downward channel here, right? So that suggests perhaps there's still some bullish momentum still in play. If we do see prices return into this downward channel, then we could also see a resumption of the downtrend. But for now, uh, as long as spot prices manage to stay above uh, this prior downward channel, as well as staying above the overlap at 3,237, right? We've got a pretty good chance that prices could stabilize around this support zone, around the first support zone, helping us identify a potential entry to go long on gold once again. And should that bullish bounce materialize, right, we can then target close to 3,400, which is an area between, well, which is an area or level just underneath the first resistance as a potential take profit zone. Now, there's a couple of uptrends that big and in the analysis I want to highlight as well. First is this uptrend begins from this swing low on 7th of April, going up to the intraday all-time high on 22nd of April. Looking at all the fibs for this on this uptrend, we can see that 61.8% retracement, along with the second support, has helped us to identify a pretty strong support zone. You can see a nice overlap being formed here, together with the 61.8% Fibonacci retracement. Now, there's a second uptrend that begins from this swing low on 15th of May, going up to the swing high on the 16th of June. Once again, we can see the 61.8% Fibonacci retracement aligning very well with the first support at $3,237 per ounce. Right, so despite spot prices remaining restricted underneath $3,430 since 6th of May, right, it's sort of like trading in a sideways channel. But as long as it does not return into this prior downward channel, and if it can stay above the first support, we've got a pretty good opportunity to go long on spot gold again. So if you can stabilize at around $3,237 per ounce, pretty decent entry point around here, and to go long on gold once again. But remember, I would wait for price to stabilize and form a clear bottom before being formed as well. As you can see here, right? The most recent clear bottom was formed on Monday, 30th of June, right? Towards the end of the day, we can see this nice bottom, or rather the second half of the day, we were able to see this bottom being formed, kind of similar to this price action here on 29th of May as well. So you can see here on both of these dates, 29th of May and 30th of June, right, in the second half of the day, we would have seen a nice trough being formed, and especially as it reacts off the 61.8% retracement, right, or close to the 61.8% retracement and the first support, it gives us a lot slightly higher conviction that we could see the upward momentum gain further traction. So similarly, once again, I would say wait for price to react off the first support and or the 61.8% Fibonacci retracement, right? Wait to see that clear trough being formed, right? And then we are able to get a slightly higher level of conviction to try and play the bounce for spot gold, right? So these are the key levels here for spot gold on the daily time frame. First resistance is at $3,424. It's a multi-swing high resistance that has been in place since 6th of May. Second resistance is at 3,500, which is the intraday all-time high. That was formed on Tuesday, 22nd of April. And then first major support is the overlap at $3,237, which is also accompanied by Fibonacci retracement at 61.8%. And finally, the second support is another overlap level at $3,132, which is also accompanied by a Fibonacci retracement at 61.8%. All right, now with that, let's move on back to the currency pairs before going over to the indices. Right, so looking at the top four best performing major currency pairs, remember we had the euro in first, dollar franc in second, cable in third, and kiwi in fourth place. So we'll take a look at the top four currency pairs and see where they are currently trading. Like for the euro, right, we can see here, right, since opening on Thursday, 2nd of Jan, till Monday, 30th of June, it has gained 13.8%, right? And after pulling back slightly since last Wednesday, we are seeing demand pick up for this currency pair once again, and the upward momentum is likely to continue as well, right? So one thing to note for the euro, right, I can spot a very nice upward channel, right, that has been in place since mid-May, right? Since mid-May, practically, we see a nice upward channel for the euro, when it has bounced off this level very clearly on 29th of May. And we can even argue here on Monday, 23rd of June, in reverse of the lower trend line of this upward channel. Once again, it ran into resistance quite close to the upper trend line on 12th of June, and very clearly ran into resistance on 1st of July. So as long as this upward channel is respected, right, the bullish momentum is likely to gain further traction, right? And of course, we can also see that the euro continues to trade above the green Ichimoku cloud, which highlights the strength of the upward momentum as well. Now with that, we can try to identify the key support and resistance areas, right? For the euro, if you look at it here, right, it has run into resistance this or last week at around 1.1829. Right now, this level, the last time the euro was trading around this level was back in September 2021, so nearly 4 years ago. Now you can see a huge appreciation in the euro versus the US dollar, hitting levels last seen 4 years ago. It is also has approaching a level that what I would define as a multi-swing high resistance. When we look at the market structure for the euro on 2nd of August and then again on 7th of September, we can see two significant swing highs being formed, highlighting a pretty strong resistance barrier at around 1.1875. Right, so this is how the first major resistance for the euro has been identified. It is at 1.1884, a multi-swing high resistance that has been in place since 30th of July. Now slightly higher up, right, I would say there is another pretty decent overlap, and that overlap begins from here on 11th of March. We can see a swing high resistance being formed here in middle of March 2021. Then we see a swing low with swing high first. Then we see a swing low being formed here in early May 2021. This creates a pretty decent overlap. And it also we can also spot another mini swing high resistance being formed in June of 2021. So this creates helps us identify a pretty significant overlap level at 1.1983, which we can label as the second resistance. Now coming back to where the euro is currently trading. Okay, before that, we can see it's currently trading at 1.1774. It had actually also, I would like to highlight this overlap level as well. Right, this is also another pretty significant overlap, stretching all the way back to, probably stretching all the way back to September 2020, right? We can see swing low bounce taking place here in October 2020, another swing low bounce taking place in November 2020. You can even argue here, March 21st, swing low bounce here as well, very clearly. Swing low bounce in August 2021, and as price broke underneath, running into resistance not once but twice on 21st of October and 1st November 2021. So very clearly a pretty strong overlap at 1.1665, which we can probably use in identification of the first support. So let's come back to where the euro is currently trading and see whether this level is something that we can probably use. Yep, we can see that, right? The overlap level there is pretty significant, and you can even argue here back in middle of June, as the euro was rising strongly, it sort of stalled just underneath this prior overlap resistance. But of course, as the euro broke above it at the end of June, a prior overlap resistance has the potential now to function as the first major support. Now for the second major support for the euro, right, we can see that it forms a pretty decent swing low here on 20th of June. And this level also intersects well with the lower trend line of the upward channel, right? So we have a pretty decent support area here. In fact, when I look across it now, right, it actually looks like a very nice overlap. Now, why is that the case? We can see resistance being formed in the first week of June, and after breaking higher on 11th, we can see it stabilizing on 18th and 19th of June before bouncing higher on the 23rd. So this creates a pretty significant overlap at 1.1449, which we can label as the second support. Right, so with the upward momentum strong for the euro, right, if it can stabilize above the first support, or if it can stabilize at the intersection, right, between the first support and the lower trend line of the upward channel, right, this could be an area where we can have a decent opportunity to go long on the euro once more, right? Nobody wants to buy it right at the top. We're always looking for a pullback, right? This was a nice pullback that had materialized on 23rd of June. Perhaps there's something being formed here, right? We have another pullback currently in progress. Perhaps there's something being formed at some point this week, and we could see another nice bounce to see the resumption of the uptrend. So perhaps maybe a little bit of patience can be exercised to go long on the euro, might get a better entry price close to the intersection of the first support at 1.1665 and the lower trend line of the upward channel. Now on this uptrend that begins from 12th of May, We can now also run a Fibonacci retracement, ending with the swing high on 1st of July. Looking at all the fibs, we can see that the first support is also accompanied by Fibonacci retracement at 23.6%, and the second support accompanied by the 50% retracement. So we're going to keep these two retracements in the analysis. So what these Fibonacci levels function as is an additional factor in the uh, to highlight the strength of this support zone. So first support is now has three supporting factors. Right, we have three supporting factors. We have the overlap at 1.1665. We have the lower trend line of the upward channel. And now we also have the 33.6% Fibonacci retracements of three factors, highlighting a potentially significant support zone, which if it does indeed gets hit at some point this week or maybe early next week, might give us a better entry price to go long on the euro, right? Somewhat similar to the setup that we saw here on 23rd of June, as price broke higher, as the euro broke higher, breaking above this near most immediate resistance barrier and also breaking above this significant swing high on 21st of April, right? We can see the euro pulling back, stabilizing at the pullback level, right? As price breaks above this resistance, it has the potential to function as a pullback area, and that was what had happened quite nicely. And we saw a nice rebound take place, right? You can see this rebound from trough to peak was as high as 3.3%. Of course, we're not going to catch it at exactly at the bottom, but even if we were a day late and trying to catch it from 24th of June, even then we can see this was a move that was as large, or that climbed as high as 2.2% or nearly 260 pips. Right, so probably perhaps uh, uh, it might be a good idea to exercise a little bit of patience for the euro. Wait for it to pull back towards a significant support zone, and if it does hold above this level here, then we can try to ride the momentum to the upside once again. All right, so these are the key support and resistances for the euro on the daily time frame. Right, very strong upward momentum as broad dollar weakness continues to persist in financial markets. Right, now let's move on over to the second best currency pair, best performing major currency pair, and that's the dollar franc. Right, so we can see since opening on Thursday, 2nd of Jan at around 1977, it has it dropped as low as, what is this, 79 30 by 30th of June, dropping nearly 12.7%. And at the lowest point this year, which was last Tuesday, the dollar franc had dropped over 13 or nearly 13.3%. Right, we can see that, of course, this currency pair continues to trade in a prolonged downtrend. We can clearly see a series of lower highs, lower lows, and of course, as it continues to trade underneath the red Ichimoku cloud, all factors pointing to a very strong, or highlighting a very strong downward momentum. Now, beginning from 9th of May, right, I've also spotted a very nice downward channel for this currency pair, and we can see that this downward channel has continued to remain respected. And we can see the dollar franc running the resistance and the upper trend line on several occasions. Right, firstly on 29th of May, then again between 18th of June till the 23rd of June as well, running the resistance once more. On the flip side, we can see it finding support on the lower trend line a couple of times. Right, you could argue here on 26th of May, it came pretty close to the lower trend line before stabilizing and reversing higher. Even here, very clearly, last Tuesday, 1st and 2nd of July, stabilizing around the lower trend line to resume the upward, to reverse and climb higher to make a retracement to the upside. However, we are seeing dollar weakness return into financial markets, causing the euro dollar franc to pull back. However, right, perhaps we could see some continuation for the dollar franc rising up towards what I see is a pullback resistance level at 80.88. And if we do see the euro, perhaps, sorry, dollar franc rise up towards the area that's identified by the upper trend line of downward channel, maybe getting close to the first resistance, this area may be a better opportunity to go short on dollar franc. Remember, since 12th of May, this downward channel has been respected, right? So perhaps if we are looking to go short on dollar franc, maybe this retracement still has a little bit more legs on it, and we could see dollar franc perhaps climb higher over the next couple of days. And should it reach this zone here, close to the upper trend line of the downward channel and we see a clear rejection, right? Something like this. Of course, this is a clear rejection that took place on 20th of June, another clear rejection taking place here on 29th of May, and we see clear rejections such as this off the upper trend line of the downward channel. Perhaps it may be a better opportunity to go short. If you look at it here, right, even after the, the swing high is formed, right, you can see from 24th of June till 1st of July, dollar franc dropped over 3%, dropping nearly 250 pips during this period. And as well, after swinging down lower, right, even from the second day, right, okay, it dropped about nearly 0.9%, about 75 pips as well. And so perhaps we may get a better opportunity to go short on dollar franc, maybe at some point this week or early next week, right? Maybe a better entry can be identified close to the upper trend line of this upward channel, a downward channel. Now zooming out, we can see that the dollar franc is trading at levels last seen. I think we'd have to switch to the weekly time frame for this, right? We can see the dollar franc is trading at levels last seen in September 2011. So this is nearly 14 years ago, right? You can see the franc has appreciated significantly, hitting levels last seen 14 years ago. Right, so when I look at this date here, 29th of August 2011, and let's go on the daily. Let's try to go back to this date. If you look at where dollar franc was trading around this period, right? And now it's currently trading around 79.60. We can see that we can spot a pretty significant swing low that was formed here on August 2011. You also see another pretty decent swing low being formed here on 5th of September. Perhaps these are areas that we can try to identify as potential support zones for the dollar franc. Right, so perhaps first support could be this level here at 78.58. See a small swing taking place here on 19th of August and a very clear significant swing low being formed on 5th of September 2011. Right, probably very likely to be a good first support area. And of course, the second significant support is this swing low that was formed at 72.07 on 9th of August 2011. Now coming back to where dollar franc is trading, right, we can see that this first support was a pretty significant level to watch out for, because this is where pretty much dollar franc stabilized on Tuesday, 1st of July. So it's pretty important to identify prior swing highs, swing lows, or overlaps, right? Whether they're resistances or support areas, because they do tend to function as very strong areas of support or overhead resistances as well. Now we can see second support is miles away from the first support, right? There's really nothing in between these two. So perhaps in such a scenario, we can try to rely on Fibonacci tools such as projections and extensions to help us identify some sort of intermediate support area. As you can see here, this is a massive gap between the first and second support based on price action. Now, to find a Fibonacci extension, we're going to be running a retracement from this swing low on 21st of April, going up to the swing high on 12th of May. Key extension levels sit at 127 and 161%. We can see that the intersection of the downward channel and the 127% Fibonacci extension, as well as the first support, had previously helped to identify a pretty strong support zone here. You can see here how three factors have come together to identify a pretty strong support zone. So as dollar franc was falling sharply at the end of June, this would have been an area that we would have targeted as our exit point, right? Because you can see we have a very significant support zone being highlighted by not one, but three factors, right? We have the swing low at 1758, we have the Fibonacci extension at 127%, and of course, we had the downward channel as well. Now, When we look at the extension at 161%, we can see that it sits around 77.68. So perhaps this is a level that we can keep in mind as well, right? So should we do see dollar franc slide lower, right, over the course of over the next couple of weeks, on the first price targets that we can keep in mind for the short dollar franc trade would be the first support at 78.58, and of course, should we continue to see this currency pair move lower, we can then consider the extension at 161% as another potential take profit target. You can see the intersection of the extension at 161% and the lower trend line on downward channel can also help us identify a nice uh, or suitable area for potential take profit target, right, as long as this downward channel continues to remain respected. Now, on this downtrend, that begins from the swing high on 12th of May, going down to the swing low on 1st of July, we can run a Fibonacci retracement, and we can see that 30% retracement sits pretty aligns pretty well with the first resistance, and we can see 23.6% sitting around 80.13. So I'm going to keep these two resistance levels on, or these two retracement levels on, and we'll just bring a little bit of attention to the retracement at 23.6%. Perhaps this intersection between the 23.6% Fibonacci retracement and the upward channel of the upper trend line of the downward channel could be an area where we could see dollar franc stall as well. So perhaps this currency pair, as it retraces higher, may not reach all the way up to the first resistance at 80.88. Perhaps it is likely to stall at the intersection where the upper trend line of the downward channel and the 23.6% Fibonacci retracement intersects. All right, now let's move on over to cable. Right, cable has been the third best major forex pair for 2025, or in the first half of 2025. Right, where we can see it opened on 2nd Jan at about 1.2515 before closing at around 1.3737 on 30th of June to gain 9.7%. Now we can see that this currency pair has pulled back uh, since Wednesday as well. Right, it has dropped about 1.6% from peak to trough, right, and is hovering around 1.3560. Right, it is hovering close to what I see is pullback support level, right? When I look across 1.3617, this level previously was resistance back in February of 2022. You can see clear swing high being formed here, right? Nice top being formed here. So clearly very strong resistance previously that was formed on February of 2022. And it is also an area, right, where cable once again stalled. Uh, you can see it 3 times as well, right? You can see it stalled here 26th of May, then again on 5th of June, and finally on 13th of June as well. So you can see here why it's quite important to identify prior significant resistances, right? Because this is areas where we can expect that particular instrument, or in this case, the cable, to stall at a prior significant resistance, right? So you can see a nice, almost like a nice triple top being formed here between 26th of May and 13th of June. However, as price breaks higher on 25th of June, the prior resistance can function as a potential support area, right? It wasn't the cleanest support area, but it did manage to hold up cable since 2nd of July, right? Helping it stabilize at around 1.3570 and around 1.3630. Pretty wide range, but nevertheless, this was a support area that had held up. But you can see, of course, very clearly, this is not the cleanest support area. So this is I wouldn't be so uh, convinced to highlight this as the first major support, maybe more of an intermediate support based on the recent price action that we've seen since Wednesday, 2nd of July. We did see a much more cleaner bounce off this level here, right? But uh, because of this wicks dropping as low as 1.3570 on 2nd of July, and of course on Monday, yesterday as well, right? This is not the strongest support level, so maybe more of an intermediate level, just something to keep an eye on for now. However, where we could see pretty strong support is at this swing low here, right? It's a pretty significant swing low that was formed on 19th of June at around 1.3410. So this is where I would try and label the first major support. Right, first major support for cable is at 1.3400, a significant swing low that was formed on 19th of June. And slightly below, right, we can see another significant swing low being formed here on 12th of May, coinciding with almost with the swing high resistance that was formed on 3rd of April, right? So as price broke above the swing high resistance, the prior swing high resistance, it could function as support, and that's what it looked like to have happened on mid-May. And this is an area that we can use to identify the second major support for cable. Right, I would say probably let me just start from here, the swing low, second support. And now that we've defined the first and second supports, we can also run a Fibonacci retracement, right? We've got a pretty strong uptrend that begins from 13th of Jan. So let's try it out. Starting the retracement from the swing low, 13th of Jan, going up to this year's high, 1st July. And we can see the 23 and 38% retracements aligning pretty well with the first and second supports respectively. Now there's another strong retracement or uptrend that begins from 7th of April, right from this swing low on 7th of April, going up to the high on 1st of July. Once again, let's take a look at all the fibs. We can see the 38% and 61.8% retracements aligning pretty well, once again, with the first and second supports. So when we have additional Fibonacci retracements, aligning well with a predefined support area like such as the swing low, it gives potentially further significance to the strength of this area. So although there was a pretty decent support area identified at 1.36 1.3628, but this was in hindsight now this looks to be a pretty weak support area, right, as we didn't see a clean hold up here. Where I do see a potentially much more stronger support zone is at 1.3400, a significant swing low that's accompanied by not one but two Fibonacci retracements. Right, so if we do see a much deeper pullback for cable, and if we can stabilize around 1.3400, right, maybe that'd be a better opportunity to go long. But before that, right, I can also spot a very nice upward channel that looks to be in place, or that has begun rather since 10th of April. And we can see that it has cleanly bounced off the lower trend line of this upward channel on 20th of June. And if we can see cables bounce off this lower trend line once again, perhaps at some point this week, we may get a better opportunity to go long on for this currency pair. But remember, if this lower trend line gives way, the next major support I'll be looking at is around 1.3400. But take note, right, any break of the structure could result in a much deeper pullback, right? Because we have something similar that had happened here as well. And if you look at it between 10th of Jan and 4th of April for nearly a period of 4 months, cable was riding this upward channel, but as it gave way, it dropped all the way down to 1.2689. But after that, staged a very strong rebound. So perhaps we could see a similar reaction over the next couple of weeks, right? If this lower trend line of the upward channel gives way, where I would like to see it, where I would like to think it could stabilize, is at the first support at 1.3400. So remember, if we don't see a clean reaction of the lower trend line this week or early next week, and if price gives way, if price breaks through the downward channel, next major area support I'll be looking at is at around 1.3400. Now, in terms of resistance, we're gonna have to go back. There's a nice swing high that was formed here as well, right? Swing high resistance formed here at end of June, early July. Now let's see if this coincides with any other significant resistance areas. Now, if I look at it here, very significant swing high resistance being formed on 21st of October 2021, and even here as well in September 2021. Right, so in terms of the first major resistance, I'm inclined to use this swing high here at 1.3824, label this as the first major resistance. and higher up, I would be inclined to use this swing high here on 29th of July as the second resistance, 1.3959. You can see once again, as cable was rising strongly at the end of June, early July, it stalled pretty much, or not stalled, pretty much it stalled just underneath a very significant swing high resistance at 1.3824. All right, okay. Since we are running out of time, let's move on over to the next section, right? We've covered gold, we've covered uh, cable, dollar franc, and the euro. Let's take a look at US equities, right, or US index futures, right, after a very tumultuous and extreme volatile April and or April rather, we've seen equity markets recover very strongly, right? We've pretty much seen V-shaped recoveries across almost all of the global major indices, right? And by the end of the first half of this year, right, US 30 was up 4.6%, US 500 up nearly 6%, and US tech up nearly 8%. Right. So it was a very strong recovery, right? And when we look at the charts, and when we look at US 500, we see a very nice V-shaped recovery. Oops, V-shaped recovery being formed, right? We can see here, US 500 dropped as low as 4,800 by 7th of April. This marked a brief bear market correction, right? Because you can see at this level at 6,146 was the prior intraday all-time high that was formed on 19th of Feb. And we saw US 500 drop as low as 4,800 on 7th of April, entering bear market territory, dropping nearly 22%. However, it managed to close up on the day, but it was still down a massive 17.3%. But since then, of course, we've seen equity markets stabilize. And not only did we see a strong rebound, many global equities have also made new all-time highs in 2025, right? This was the prior intraday all-time high at 6,146. And as US 500 broke out of this prior resistance, right, we can see a nice double top being formed here. Firstly on 24th of Jan, and second on 19th of Feb, right? So this was a very significant multi-swing high resistance. But as that level got taken out on 26th of June, now we are able to identify a potential pullback area for US 500 at 6,128, which we can label as the first support. Now, in terms of the second support, right, there's another decent pullback level to take note of, right? You can spot another swing high being formed here on 11th of June. Then as price breaks above it, this could be a potential pullback level as well. So this is how the second support has been labeled. Second support is another pullback level at 6,034. Now, beginning from 21st of April, right, I can also spot a nice upward channel, right? Again, not the most cleanest upward channel, but we can see that US 500 has continued to respect this channel quite well. So as long as we continue to see uh, bounce off the lower trend line, right, I think the upward momentum is still intact. But if this channel gives way, right, we could see a much deeper pullback materialize, right? It's always good to see some pullbacks along the way, it's, right? Of course, price never moves up or down in a straight line. Healthy pullbacks, such as what we've seen here in end of May or third week of May is healthy. This as well, this pullback here in the second half of June as well. So perhaps we could see something materialize over the next week and a half, right? Perhaps over the next 5 to 7 trading days. Perhaps should we see another pullback and US 500 returns to around 6,130 and can stabilize around this level, may get a better opportunity to go long on this instrument once again. Now, on this uptrend, right, we can run a couple of Fibonacci tracements. Firstly, beginning from this swing low here on 23rd of June, going up to the swing high on 3rd of July. You can see 38 and 61 retracements aligning pretty well with the first and second supports. Maybe we can run one more retracement from this swing low, 21st of April. Let's see if the 23.6% sits close. Yeah, it somewhat sits close to the second support as well, so we'd keep that on. Now, you guys may be wondering, how could we possibly identify the first and second resistances, right? With the latest intraday all-time high being formed on uh, last Thursday, 3rd of July, at around 6,284, right? How could we possibly identify the next resistance barrier, right? So in this case, we can rely on Fibonacci tools such as Fibonacci extensions and projections. So let's try to find an extension first. To find extension levels, we're going to run a retracement beginning from this swing high on 25th of March, going down to the swing lows 7th of April. Key extensions sit at 127 and 161%. Quite clearly, 127% extension has already been exceeded, but extension at 161% sits at 6,394, so potential resistance barrier around this area. So now, of course, firstly, let's get rid of the extension at 127%. Right, so we have a potential resistance identified by the extension at 161%. Let's try to run a projection as well. Projection involves 3 points, which let's start from this swing low on 21st of April, going up to the high on 20th of May, ending with the swing low here on 23rd of May. We can see that, okay, first of all, key projection levels sit at 61.8%, 78.6%, and 100%. You can see here, the projection at 61.8% is pretty much exactly where US 500 stalled on Thursday, 3rd of July. So as price was rising higher, as it made this bullish breakout through the multi-swing high resistance, we would have used this projection at 61.8% as a potential take profit targets, right? So good area to book some profits, right? Because we now see US 500 pulling back over the next couple of days after hitting the projection at 61.8%. Now, we can also see the projection at 70.6% sitting pretty close to the extension at 161%. So this is where I would label the first major resistance. And of course, we can use the projection at 100% to label the second resistance. Right. So should we see a healthy correction or pullback materialize over the next few trading days? And if you can see the US 500 bounce off this support zone once again, right? Perhaps around 6,120, 6,130. We've got a pretty good chance of a nice continuation of the uptrend, especially if price could break through the 61.8% projection cleanly. If that were to happen, then we can target a suitable take profit area close to 6,390, right? Anything underneath or within this resistance area would be a suitable place to identify a potential take profit target. All right, before we wrap things up, I'm just going to launch a poll as well for those of you who are on Zoom. Truly appreciate it if you guys can give your feedback with regards to today's webinar. And of course, should you have any questions, please do drop them in the Q&A box. I'll be more than happy to answer any queries before we wrap up today's session. Right, keep the poll running for a little bit longer, another 20 or 30 seconds. And of course, should you have any questions, please do not hesitate to drop them in the Q&A box. We'll be more than happy to answer your queries before we wrap things up for today. All right, I think that's most of you who have voted. All right, thanks everyone. Thanks for tuning in to today's session brought to you by Vantage. Do look out for all upcoming webinars for the remainder of this week. Right, we've got another webinar coming up tomorrow. That's going to be at, let me think, what is that? 7 a.m. GMT time. Yeah, that's going to be at 7 a.m. GMT time tomorrow, Wednesday, 9th of July. All right, thanks once again, and wish you all the best in your trading journey, and look forward to catching all of you at the next session. All right, thanks everyone. Take care and have a great trading week.